take a look at the Asian markets. They're largely higher.
Finance Ministry was actively considering options to try and provide some relief on the long-term capital gains tax.
The immediate support for the Nifty becomes 22,840.
Representations were made to the Finance Minister, and I think in a very, very welcome move.
India remains by far the best equity story in this region.
The Nifty starts about 1.25% higher.
This correction, led by global forces and macro, has been quickly bought in.
The RBI is likely to remind us that domestic monetary policy decisions will remain very much anchored to where the inflation path is.
Government is reassessing its plan to come up with the OFS as far as its stake at the red is concerned.
24,300 on the Nifty, 1.25% higher.
Mid-cap and small-cap end of the market is doing especially well.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that is the day so far, and it has been a strong day, and there has been no let-off, no real fading, especially as far as the Nifty is concerned. Bank Nifty is another matter. Lots of numbers are coming through, Pidilite numbers flashing at the bottom of the screen, so there is a fair bit to get through. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal Studios. I'm Prashant, Surabhi Rima here, and we have Nigel joining in from the newsroom floor. Guys, hi, good afternoon.
Hi, good afternoon. Nigel, you were right. I did get the color right. Well, I don't want to jinx it. We still have 60 minutes to go.
But it's been a stable session, right, today?
Well, maybe the shade of green could even get greener. Let's see. The Nifty Bank is participating. That's going to be important. So it's been a good start. Good one getting into the last 60 minutes of trade. Let's see whether or not we can build on from there, guys.
No, absolutely. And, so it's a strong session, even as the Nifty is off the highs. I mean, we're off the highs, not by that much, but we're off the highs. It would have been nice if the market traded above yesterday's high. So if you look at the index, the Nifty, we got to almost yesterday's high and then it came off. So the high yesterday is 24,382, and typically this kind of price action, you need to take out the previous sort of high, because yesterday was such a large range. We've not done that as of yet. Today's high is just below yesterday's, and that is 24,337. So about 40 points, 35 points short. So that's point number one. Range day for the Nifty Bank, although as we begin the session here, I think there is a bit of a lift which is appearing on the Nifty Bank. Yes, I think it is there. So from 2 o'clock, we were at 49,900 for the Nifty Bank. We've moved up to about 50,100 plus. And the intraday will tell you that. CPSC, government stocks, that's the sectoral bucket which is doing the best right now. And mid-caps and small-caps, the last I checked, 2% each on sort of both indices. Advanced decline is about 5:1. So it's all in all a pretty healthy-looking screen, and lots of recoveries appearing in many parts of the market. So as I said, it is, of course, about the broader market, about the broader indices. I looked at NASDAQ futures, S&P 500 futures. They're up around 0.91% in that range. So it's looking like there is a bit of global repair which is underway as well. Rima.
Hi, it's been a stable session. So yesterday also it was positive, but towards the end the market momentum faded and markets, closed absolutely flat. But today we managed to hold on to pretty much all our gains. The mean has been largely 24,300. We've hovered there. In terms of global market action, Nikkei ends with a gain of 1.2%, but off 2% from the session highs. And Europe right now, frontline indices there, CAC, DAX and the FTSE have gains ranging from 0.8 to going up to 1%. In terms of what's moving the market in the large cap space, it's a lot of the PSUs, oil and gas names in particular. So Coal India, BPCL, top of the charts. ONGC has been a big mover. And then you've got Adani Stocks, Adani Enterprises, Adani Ports clocking in about a 3% gain. Banks, as we pointed out, has started moving in the last 30 minutes. And here the noteworthy mentions, the stocks to mention would be an ICICI Bank and State Bank of India. HDFC Bank has been strong since the beginning with a 1.5% gain.
Well, that's the large cap screen, but you've got to look at the mid caps because that's where things are absolutely flying, right? Mid caps, small caps going back to their winning ways. 1,200 points up on the mid cap index. It's been a steady rise. I'll just take some examples of high flyers. So you've got stocks like Cummins and PB Fintech. These are reacting, of course, to numbers. Cummins specifically after the commentary came in on the call earlier this afternoon, and we'll get to that with the Vamakshi in just a bit. 7% on that stock. Suzlon, you heard the management in conversation with us earlier. They have done a small acquisition and the market sort of likes the rationale, the pricing, all of it. So that's a stock that's been on circuit. Some more names. We just had numbers come in from Pidilite. That stock is up about 3%. Again, the volume growth seems to be on a pretty sound footing. Some reaction, some sort of cool off coming in. BASF is probably the earning of the hour. 20% on BASF immediately after numbers came in, straight gone and hit circuit. So that's another big mover and a global MNC player, when we talk about it. Just one more name. Look at Tejas Networks. I think there's a 10% circuit in the making on Tejas as well. The buzz is that tomorrow there's a very large tender opening for BharatNet. The next tender that BSNL will float could be a very huge one. And maybe there's some expectation that Tejas will bag at least a part of it, and that seems to be keeping that stock excited. So short point, plenty of movers and shakers in the mid-cap arena and lots of green as well. Nigel.
Well, that's right. I think on the optimism of that BharatNet big order that's coming out, I think another stock is HFCL. That one as well is moving very well. HFCL is now at the high point of the day, up close to around 7% as we speak. Well, let's get in Mitesh Thakkar back on the show. Mitesh, it's been a good session. It's been a while since we've said it at the start of closing bell, actually. But still holding with the gain of around 275 points odd. What's your sense? We build on from here. And what do you think? Is it a sell and rise market still till we take out some crucial levels on the upside?
Yeah, I think good afternoon, Nigel. It's been a good session. And, we've been expecting this. Yesterday, I highlighted the PCR today morning was 0.49. That was extremely oversold. So while the structure is weak, I think this PCR should lead to some short covering and a throwback or a strong pullback on the upside to possibly levels of 24, 350, 400. In the best case scenario, 24, 550, 600. So there's still about 200-300 points to go on the upside. But if we don't capture this 24, 600 odd levels decisively, then I think we might come back again to test the lows which we made yesterday and day before yesterday. So I think the structure is weak. But yes, in the interim, you can trade on the long side because I think for the next couple of days, the market might give a good pullback. And that still looks very likely when you look at the hourly charts as well. So I have two buy calls right now. ABB is a buy, keep a stop below levels of 77.80, which is about 100 points from here. And look at targets of around 8100. Maybe slightly more, but 8100 is the minimum bounce back which I'm expecting. And the other one is Muthoot Finance, which is a buy with a stop at 1820 for targets of 1910.
Okay, thank you very much for that. Let's get to the stock-specific action. Cummins is right on top. Came out with numbers yesterday, but today during the day, we had the conference call and very strong commentary. The management is gunning for a 13 to 14% top-line growth. Exports too have bottomed out. Vamakshi joins in with the details. Vamakshi.
Well, absolutely. It was a mixed quarter for Cummins, but it is the commentary that is pushing the stock higher today. The management said that they aspire to grow nearly 2 times of GDP, so therefore they're targeting nearly 13 to 14% top-line growth in FY25. They also clarified that the commentary that came through from the global parent, after which the stock saw a very sharp fall, applied to all of its Indian entities and not just Cummins India. They also said that domestic demand is quite good and this is likely to sustain. Exports have bottomed out. Exports have seen a recovery on a sequential basis, and that is mainly on account of recovery in the Middle East and green shoots in Africa. How much of this export demand is expected to sustain is difficult to call for them because of the geopolitical risks that are currently underway. As far as margins are concerned, they said that the margins are at a record level. However, it is quite difficult to sustain these levels of margin going forward, so they could expect some pressure there. On CBCP4 Plus gensets, they said they now account for nearly 30 to 40% of sales in the first quarter, and on an average, they're priced nearly 15 to 25% higher. But despite this higher price, they expect demand to sustain going forward. However, they are not ruling out for some readjustments in various notes for CBCP4 Plus gensets. They also see growth opportunities in various areas. They continue to invest in electrification of railways. They have products that are certified and approved and are in the testing phase. They're optimistic optimistic on the future of railways, and therefore they see a significant opportunity play out for them here. Data centers contributed nearly 10% to their revenue, and in fact they said that capacities for the heavy data center applications are completely booked out. Overall, they said that they are at an inflection point, and this kind of growth that they have posted this time around is likely to sustain for many, many years. So lots coming there for Cummins India. Positive commentary driving the stock higher today.
Absolutely. Thank you very much for that, Pharma. Cummins up about 6-7%. And this is after, actually 7% right now, and this is after a pretty good run over the last several months as well. We have Prakash Diwan joining us on the show today. So let's kick it off. Prakash, hi, good afternoon. It is a good afternoon after several wobbly days. Let's start with your take on Cummins. I mean, do you still like the story here despite the run-up in the prices? The management did sound very confident, as Vamakshi just pointed out.
No, good afternoon, Sylvie. Absolutely. I think the story remains intact. In fact, it just gets bolstered by, very clear management call on the continuity from segments which have enough headroom for growth. So look at data centers. I mean, today it's 10% that's coming from, and if the segment itself is growing so rapidly, there's no reason why Cummins will not benefit. The second area where they've got a lot of projects, real estate related projects where, things have been looking up so well. And then they always have that export opportunity, right? So I think they're firing on all cylinders. In fact, there could be some liquidation of land assets at some point in time to monetize that. But those are optionalities. But even these numbers tell you that things are looking up. A good time to buy could probably be on a day when, like day before yesterday or yesterday, where things correct. I think you should keep this on your watch, if not in your portfolio, for the right opportunity to buy. But from here, about 20-30% CAGR for at least the next 2 years seems kind of imminent. So I would definitely look at it when possible.
Okay, all right. Got that. We got lots of these stock-specific reactions coming through. So we were talking about this in the morning. Basically, after a couple of days of, we've seen this in the past as well, when everything gets sold, a day or two days later, when things start to settle down, it's good. You get sharp moves, upward corrections where stocks have sold off in many cases. There is, of course, a fair bit of news-related action as well. And one pack is HFCL. There's these telecom equipment companies. There's a BSNL tender which apparently is opening tomorrow. And HFCL is up 8%. I think you got Sterlite Tech, which is higher. Tejas Network is up 10%. So this entire pack seems to be doing very well. Do you like anything here, Prakash?
So, Prashant, I think while I've also heard of this anticipated tender opening for BharatNet, which is significant in terms of outlay, there's one company that typically gets missed out, and it has been doing a lot of work in the earlier editions of this BharatNet, and it's priced at a multiple which is fairly attractive, and that's Vindhya Telelinks. Unfortunately, it's not a mainstream telecom cable or service provider, and that's why it gets ignored. It has a lot of other things also going for itself. But this part is something which they are very much up there. And in addition to that, they're also into segments which are like fairly positive in terms of salience, water management, and those are areas they actually got into just a couple of years back, and they've been doing quite well on that. And then there's always this stake in a cement business from the Dalmia Group. So, if you look at sum of parts, I think if I had to write something from a more affirmative and definitive way, rather than just an anticipation of a one-day event, it could probably be this one.
Okay, all right. Stay on, Prakash. We have some more questions for you. Let's also go over those Pidilite numbers, which came out just a while back, and they look good. Stock was holding up as well. But let's go over the details and the internals. Mangalam, tell us more.
Well, for Pidilite, it's a good quarter, good operational beat. If you just take a look at the revenues that the companies have posted, it's slightly shy of our estimates. It's 3395 crores versus street expectations of 3470 crores. Maybe because the company has given better prices to the consumers to mop volumes, and because raw material prices themselves were a lot lower. Where do we infer that from? A strong growth in the EBITDA. The EBITDA has actually come in upwards of 800 crores versus street expectations of 770 crores itself. And that's reflected all the way down to the bottom line as as well, 571 crores versus a poll of 526 crores. Where is this led by? Gross margins. Both, year on year and quarter on quarter, we've seen a big expansion, 40 basis points quarter on quarter, and year on year as well. The gross margins have expanded by over 480 basis points as against street expectations of 350 basis points as well. The consumer business volumes have grown 8% in line with street expectations of 7 to 8%. But now there are two things we need to monitor going forward and which may perhaps put a bit of lid on the gains of the stock going forward. The first one is that EBITDA margins at 24%, while they're above our estimates, they're also at the higher end of the band that the management is comfortable with, between 20 and 24%. And second one, the volume growth, the overall volume growth this time around has been led by B2B business, where the volume growth was about 18%. Does that sustain or not? So those are a couple of factors which may limit the gains, but no taking away from these numbers. Very good numbers. And going forward, CNB volumes are likely to only improve as we move towards, the second quarter rain-related waterproofing solutions sales and also the second half of this year.
Okay, got it. Thanks, Samanglam, for that. So that's Pidilite story at the end of Q1. Prakash, back to you. What do you think? I mean, let me throw in others from the consumer staples arena as well. Yes, the others that came out with the semi-decent or, good numbers. Where does Pidilite fit? And specifically on Pidilite, what's your call?
So, Surbhi, Pidilite is morphing itself into a multi-product, through the year kind of business. Unlike what it used to be at one point in time, where the dependence on one segment was so high. And from that perspective, it's kind of been fairly resilient, fairly consistent over the last 2 years in terms of what earnings they've thrown up. But if you look at the stock price, it's kind of, it seems like it's been range bound because there's not much of a float that that changes hands too often. And if you're okay with that extremely high premium multiples that some of these businesses like Pidilite get, then it's fine to have it in your portfolio. But in that consumer space, and now I'll address the second part of your question, there's so much of, you remember we mentioned about a company, we just briefly spoke about Me2 Retail. Now that's a consumer-facing business that's kind of, rapidly seeing significance because of the spends that are happening in some of the pockets that it is present in, from sub 800 to closer to 1,000, just after the budget. So those are the things which are going to happen. Companies that have not participated in the anticipated revival of the consumer sentiment are going to take it actually in a better way in terms of whatever growth we see. So if you really want a tactical play, I would still stick with a Dabur. I would still go with an ITC and not things like which are very expensive in terms of P multiples and might still have to wait longer for urban demand to take off. So a bit picky out there, but yeah, you'll probably see something happen in the smaller names and some of these other low P stock, but could be not as expensive as the Asian Paints, Pidilites, or the world.
Okay, all right. Got that, Prakash. By the way, just one stock I want to pull up. Pidilite Pharma, it's been a rank underperformer. A lot of promise came in from the management. Delivery was short. But as we speak, Pidilite Pharma moving higher on very, very large volumes and in fact making a fresh 52-week high. So Pidilite Pharma is one stock that we should pull up. But let's focus on PB Fintech. Yash has been telling us the numbers are good. He's joining in to break that down for us. Yash.
Well, Nigel, very strong quarter for PB Fintech, and this is the second consecutive good quarter which the company has posted. As far as the revenue is concerned, out of the total business, which includes both the core business and the new initiatives, the revenue has grown at 52%. Contribution has grown at 29%. Contribution margin is down 500 basis points, but there's a reason for it. The reason, as said by the company, is that they've made certain large investments in this quarter towards capacity building because they anticipate strong growth, and that's why the contribution part of it has come down, because contribution is revenue minus your fixed cost. Apart from that, your adjusted EBITDA has doubled in this particular quarter, and adjusted EBITDA margin has grown by about 200 basis points. As far as another important number is concerned, that is the renewal of the trail revenue ARR, that has come in at about 559 crore rupees versus 418 crore rupees on a year-on-year basis. the management has specified very categorically that this number is expected to grow at a much stronger pace in the second quarter as well as in the second half of the financial year. And there are three key sentences which sum up the numbers for PB Fintech in this quarter. One, there's a strong premium and a strong revenue both in core business and the new initiatives business, with a growth of 112% in premium and 132% in revenue on the new initiatives business size. That book has become much bigger. It's almost half of the size of their main core business. And finally, on one hand, when the core business is expanding its footprint in the positive territory, the new initiative side is now starting to cut down on its operational losses and move towards profitability.
Okay, Yash, thanks for that. Well, Prakash, the stock has seen a good run from the recent low. What do you make of the numbers and their diversification plans as well?
So, pretty decent set of numbers. Of course, they'll have to de-risk themselves by diversifying, because it's a sector which is fairly prone to regulatory whipsaws. And from that perspective, I don't think it deserves the kind of premium it today gets. The P multiple of price to book, pricing probably closer to 9. Whether we can value this on a price to book, I'm not too sure. Whether you can value it on a price to earning also is a bit difficult to say. New age businesses of this nature will take some time for people to kind of start anticipating the growth expectations. So from that perspective, it is expensive. I would believe the run-up has been stupendous. I would book profits if I were holding it from lower levels, and I would look at some other businesses. If not insurance, then you can go to a delivery, which is kind of very clearly showing revival signs, or a Nika, something like that. So, yeah, I mean, quite expensive to actually look at any kind of an exposure at this point.
All right, Prakash, good talking to you as always. Thanks so much. You have a good rest of the afternoon and evening, and we'll touch base again soon. Need to take a quick break. When we come back on the other side, we'll have Aditya Sood of Incred Asset Management joining in for some perspective on the market.
Okay, welcome back. We got the market, which is up 250 points. So holding on to gains still. 24,245 is where we're at. Paytm, by the way, I mean, that's essentially what is happening. Stocks where there was, something playing out, a story playing out, and the broader market corrected, and of course, everything got sold. Individually, in many, many stocks, there is this sort of repair which is underway. Some small, some big, but it's evident in a lot of areas. Aditya Sood is with us now to take some questions on the market, his views on sectors, etc. as well. He's fund manager at InCred Asset Management. Aditya, good to have you with us here. Thank you for your time. More and more commentary on Pharma. One is hearing from money managers, Aditya. It's not as if stocks have not done well. I think on an average, if you look at US generic companies, valuations have also moved up to about 27, 28 times one-year forward earnings. But, people are coming around. Maybe this is the sector for this year. So you've been someone who's been bullish on, diagnostics, CDMO, and hospitals, the entire value chain, I think. What are the best ideas here, Aditya, according to you?
So essentially, I think so within the pharma complex, one has to be mindful that there is an element of blockbuster, and for the pretty much, for the entire pharma industry, especially the large caps, Revlimid has been one blockbuster wherein, obviously the industry has benefited immensely. So if you look at, anybody who's exporting to US, we would like to look at earnings X of Revlimid, and that is where the challenging aspect is, because pretty much, Dr. Reddy, Cipla, or a Natco is pretty much exposed to Revlimid as a product. Although what we find very interesting and intriguing here is a tailwind of, in some of the CDMO players of tailwind of the biosecurity bill, which obviously is pretty much talked about with benefits, Syngene and Neuland. Neuland has been a structural sort of a stock for us, and we have been very constructive on this name for, last 3-4 years. I think so. The stock has done, reasonably well. Possibly it is one of the best performing pharma stocks. They have a massive tailwind of a biosecurity bill coming through. More importantly, they have a impeccable execution track record of 40 years of not even a single US FDA failed inspection, which is truly remarkable in my view. Margins have doubled. They are getting into the free cash flow zone. Stock is not very expensive. Earnings have, obviously every quarter they have beaten earnings. More importantly, they are reducing their dependence on the commoditized API business, and this is a transformation which has taken, 5 years for a Neuland to happen. On the hospital space, particularly, we are focused on value picking. So our framework has been to, look at stocks, wherein valuation is reasonable. Obviously, valuation has been challenging in this space in the sense that, most of the large cap hospital names trade at 40 to 50 times earnings. So what we did actually is that, we invested into Indraprastha Medical, which was under-owned by most basically. And we have seen, Indraprastha Medical 2 days back, they reported numbers. So we believe that there is a margin uptick, which has surprised, people, because margins move from 15% to now 18.5%, 19%. But more importantly, they get into the capex phase, wherein on a base of 755 beds, they would possibly end up adding 500 odd beds, and they are a net cash company. They have 400 crores of cash which can be deployed. So we are value seekers in this market. We also have an exposure towards Thyrocare on the diagnostic side. So if you compare and contrast Dr. Lal Pathlab, stroke a Metropolis to a Thyrocare, clearly there is earnings rebound now, and growth is, sort of surprising on the upside.
Do stay on, Aditya. We just want to quickly talk about ONGC. That's up 6% on the back of the commentary that the company had to make post their Q1 number. Sonal joins in for details. Sonal.
Well, yes, it's positive commentary coming in from ONGC. Brokerages too are bullish after the conference call. Jefferies has a buy rating. They've increased the target price as well on the stock. They say management reiterated their production ramp-up outlook for KG Basin, which is from the third quarter. They will achieve peak production in both crude, which will be around 45,000 barrels per day, and gas at 10 MMSCMD by end of FY25. And they expect this to contribute 11% to consolidated EBITDA by FY26. Premium pricing from gas from new wells, that is also something which will aid around 14% of their volumes. That is something they're positive on. So they have a buy rating with a target price of 410 rupees. Nuvama says that management is of the view that there are no windfall taxes on the KG Basin fields, and that is unlikely as well. That was a fear that, higher windfall taxes even in those newer fields could impact margins. They maintain a reduce, however, with a target price of 245 rupees a share. Prabhudas Leeradhar says that the combined current gas production from two clusters at KG Basin is at around 1.6 MMSCMD. The target is to reach 6 MMSCMD by end of 25. They upgrade the rating from reduced to hold with a target price of 322 rupees a share. Also watch out for Oil India, reports numbers tomorrow, ahead of which the stock is up around 8%. We'll be watching out for their production guidance, their update on Numaligarh refinery capacity expansion, and increase in production at Baghjan field as well. Remember, the stock is already up 146% year to date. The stock trades at around 9.5 times FY26 EPS, while ONGC trades at 4.9 times FY26 EPS. So there is a valuation differential here, but largely analysts are positive on both the stocks.
Okay, thank you very much for that. Aditya, before we get to the oil and gas space, wanted a quick comment on Tejas Networks, because in the past you've spoken about how you've been bullish on Tejas Networks, and now tomorrow the Bharat Net 2 Phase 2 tender opens up, and it's estimated to be a fairly large one. And Tejas Networks in the past has spoken about how the equipment portion will be 8 to 9% of the overall size, and that's a total addressable market of 4 to 5,000 crore for the company, and they're hopeful of winning a fair portion of that. So which are the potential beneficiaries, and how has Phase 1 played out for these companies?
So I think so in the current phase, there is a talk that, there are some 2 lakh panchayats that need to be connected, which obviously leads to a massive opportunity. The overall size of the tender is estimated to be closer to 65,000 odd crores. Obviously, equipment is going to be a slightly smaller portion, pegged at, 5 to 6,000 crore for a company like Tejas. One of the things that, one should be mindful about is that, Tejas has a excellent track record in terms of, working with the BSNL, and more importantly, in the current form, Tejas is not really running a risk of, receivables, which was a thing in the past, because system integrator for the 4G, 5G upgrade is with TCS, which obviously is a Tata Group company again. So essentially what we see here is that, this is going to be a very sizable opportunity. There are companies like HFCL, Finolex Cables, which obviously benefit out of the OFC complex. These opportunities for the base of revenue that these companies report could be sizable. I think so. What Tejas has mentioned in the last earnings presentation is that, the domestic total addressable market for a company like Tejas is $5 to $6 billion. Obviously, the global size is, fairly large. It is pegged at, $120 to $140 billion. We believe that TAM is expanding at a very, very rapid pace. If you look at, Tejas, what it was, when Tata's made an open offer for the company, the order backlog has gone up by 7x. 2,000 crore order backlog has led to a 14,000 crore of order backlog. And obviously, profitability is doing, is being buoyed up by having an element of PLI benefit as well. So this is a real example of Make in India, essentially, and a company which has got very high, sort of a very wide moat, because it has got obviously 450 patents, which is truly remarkable in my view.
No, I mean, all points, good points there. Thank you very much for that sort of quick primer on Tejas there. Aditya, good conversation overall. Appreciate you joining us here with that perspective. Well, Lupin is what we want to focus on. Numbers were good, 20% EBITDA beat. And my colleague Ekta spoke with the management of the company and began by asking them about their India business growth and the outlook there. Listen in.
The India business includes what we call India region formulations plus other formulation sales that we do in India as well. So that was the other part was also a very strong contributor to the growth. Minus that, the growth was little over 10%. Again, very good growth. The Indian market is back to reasonable growth. Our goal is to grow 20 to 30% ahead of that market, and we're on track with that growth. We see that across our key therapy areas. So we see the growth in cardiovascular, we see the growth in respiratory as well. Diabetes has been slow for us with the in-license portfolio, but net of the in-license portfolio, the growth was actually 13% internally. So good growth in India. We've added a lot more people. We're close to 10,000 people now. Yes, we're all in. We're all in for India.
But is this growth sustainable in the coming quarters? What is an average?
So I think double-digit growth in India is an expectation. I think the market is expected to grow at 7-8%. On the back of that, if you do the math with 20 to 30% more, we should be at double digits. So that is certainly our aspiration for India.
Okay, all right. Vinita, the US was the other key driver this time, $227 million. How much of this quarter was because of Mybetriq generic, and how much of it was due to other key drugs such as Spiriva generic, albuterol, Suprep, Duravanir?
Yes, so it was a very solid performance across both inline business as well as new product launches. Pretty stable inline business, some decline in products like Suprep that saw additional competition, but more than offset by the new product launches. With the respiratory products, both tiotropium as well as albuterol were pretty strong contributors to the quarter as well. We continue to sustain our 30% share of tiotropium and continue also to deliver pretty strong share on albuterol. So respiratory products did extremely well. The new product launches, both mirabegron as well as doxycycline Oracea that we launched in April, were strong contributors to the quarter. So, really, both the inline products, respiratory products, as well as mirabegron and doxycycline contributed to the quarter.
Okay, so what are you guiding for when it comes to the US? You've mentioned in the past that you all will sustain $200 million per quarter. You've done better than that. You've almost done 230. So should we work with a figure which is higher than $200 million? Has the range moved up? What is the sustainable run rate for the next couple of quarters?
So around the current levels, between 220 to $230 million a quarter, depending on, changes in the marketplace with key products. Just given our inline products as well as the new product launches, the ramp up of new products that we've launched, like mirabegron, as well as additional new products that we have the potential to launch now. Last week we received approval for Predfort, where it was CGT approval. So we are really getting ready to launch that product as soon as possible to, benefit from the 180-day exclusivity. That will be hopefully a material contributor. And then as we look through the year, other product launches, including material injectables like glucagon, more at the end of the year. But, given both the stable base business plus now the new product launch engine also delivering at a high gear, we expect to really sustain around the current levels, I would say, between 220 to 230 million.
Okay. All right. Nilesh, on guidance, the last time we spoke with regards to FY25 guidance, you said you expect around a 10% growth in FY25, margins at around 20%. And first, you need to firmly entrench that 20% margin. Are you sticking to that guidance considering the quarter has done so well?
I will hand over to Ramesh to answer this as well. But from my perspective, I think first of all, you're seeing us getting back to growth. So you see that double-digit kind of growth. That's certainly something that we expect to continue, led by the US and then, all other geographies, including India. On the profitability front, we're obviously, I think we're pretty well set on the margin that we're getting to now. There'll be a little bit of lumpiness, things will go up and down, but I think we talked about firmly entrenching at that 20% level and then improving from there. So obviously we're on track for that. But I think Ramesh can add here.
Okay, Ramesh, go ahead.
Thank you, Nilesh. You recognize it's actually a function of three things: the top line, the middle lines in terms of cost, and of course the R&D expenses, which actually plays a big role. The top line buoyancy will certainly continue with an array of products that we'll be launching in various parts and the like. And of course, there's been a tremendous focus on, in fact, the cost lines as well. Productivity gains, in the alternate vendor development strategies, focus on margins. All of this has certainly paid off very well. On the R&D front, you recognize that this particular quarter has been a little lower than the past. If you look at, for example, Q4 FY24, we actually looked at 430 odd crores, whilst this particular quarter has been 350 crores. We do believe that it'll actually step up in the quarters to come. So from that perspective, there would be, of course, a slight reduction. So if you were to look at EBITDA margins without considering R&D expenditure, it would certainly be increasing. But overall, I would think that be guided for about 20.5% for this year overall. And we believe that we are in line to do at least 21% for the full year.
Okay, so you're expecting to do 21% for the full year in terms of margins. 22 to 23% was your longer term target. When do you get to that, Ramesh?
It's all of those things that we have planned for are really on course. So essentially, the kind of products that you'd be launching in various parts and the constant focus on costs. And of course, the R&D expenditure. From our perspective, the core is indeed 22, 23. But you would also imagine you can actually if you look at, in fact, the adjacencies. So if you were to actually knock the impact of adjacencies, we're already at 23%. And we, over the next couple of years, are looking at various options for looking at the spin-offs and bringing in private equity monies. And they would also be evolving in terms of business itself. So 23 and beyond is certainly a target that you'd achieve in the medium term.
When you say spin-offs and private equity money, what are you referring to? Is it for the business?
The adjacencies in terms of the digital business, the diagnostics business, the OTCs and all of that as well, which at this stage are not making monies.
So anything we can expect in the near term, and for which business in particular?
No, we have also a timeline when we will be looking at all of this. So we would like it to gain in critical mass before we take steps in that direction.
All right, that is Lupin sounding confident about retaining that growth trajectory for the rest of this year, projecting margins of about 21% for FY25. Stock's been holding up quite well after what has been a good quarter. Take a break, come back on the other side, and we'll get you some final trading calls for the day.
The government is currently mulling over these representations that it has received on the budget proposal.
The old tax regime continues to coexist with the new tax regime, given the option to consumers, to taxpayers, to switch depending on what they feel they most prefer.
Amendment was moved in Parliament, and essentially what it does is that it gives people, like the current tax regime, the option to either avail of the indexation benefits or avail of the lower rate of tax indexation benefits wherever the option is the lower.
Welcome back. Well, the banks are making a bit of a dash on the upside. Remember, that's the one that's playing out the weekly expiry. The Nifty Bank is now up close to around 400 points. And HDFC Bank is hovering around that 20-day MA. Remember, it's been taking support around this level. Giving it company as well on the upside is Axis Bank. Both of them have perked up a little bit, which has helped the Nifty Bank move to the high point of the day. Mitesh Thakkar is back with us. Mitesh, a good session as of now. What would your comment be? Take some money off the table or ride it from here on?
I think, ride it, because I believe that this oversold situation will still, give you a slightly higher movement from current levels. So in that sense, suggesting people to hold on to long positions if they have. 24,350 is my first pivot, but I think there's a chance that we might extend it to about levels of 24,550, 600 zones, and that is where I think, strong supply will emerge. So for the timing, just hold on. I think this does look like a market which has found its feet. Some short covering is happening. We look at the PCR data, of course, on a regular basis. Yesterday was 0.49, which is extremely oversold, and therefore, we are seeing some kind of a bounce back happening. I think this might continue. On the stock side, I have a BTST on SRF with a stop at about 25.60 and a target of 26.50 possibly can be looked at. And Syngene is a BTST with a stop at 8.44 for targets of 8.60.
Okay, all right, Mitesh, thanks a lot for that. Well, let's focus on Coal India. And Coal India did see a correction of roughly around 9% in the last few days, but it's bounced back in today's trading session. And Jefferies has come out with a note. Remember, they have been positive on the stock. They have a target price of around 600 rupees. So let's break this up for you into 4 factors. Point number 1, they're talking about India's strong economic growth outlook, which will help drive the growth for coal. And in that case, Coal India's volumes as well could move up. They are factoring in a 6% CAGR growth from year on the volumes front. They're highlighting that the power PLFs, they haven't reached the highest levels we have seen since 2008. But in the coming years, they believe that the PLF will go back to around that 79-80% odd. So that's one factor. And the thermal capacity addition as well should be in the vicinity of 7 to around 17 gigawatt per year. That's much higher than the 2 to around 5 that we've seen in the most recent years. So higher production, higher capacity coming on stream, as well as higher PLF will drive coal offtake. Next up, they're talking about the big fall in e-auction prices. They believe the worst seems behind and things should look up from here on. To give you a couple of numbers, the e-auction premium in comparison to the FSA was more than 200% in FY23. And in the first quarter that's just gone by, that number's come down to around 58%. But they say it's par for the course because the next 2 years, they're factoring in 55 to around 60% of e-auction premium in comparison to FSA. Moving to point number 3, they have cut their cash EBITDA by around 6% because they're factoring in a little lower volume than what they were factoring in earlier and relatively higher cost. But they're saying the EPS as well as the EBITDA gets a bit of a boost up. Why is that? Because the way they're accounting for the non-cash stripping ratio. So because of that, they are working with a flattish EPS number for the next few years of around 58 to around 63 rupees. In the past year, it was around 61 rupees odd. So a broad range is what they're working with. And finally, they're saying valuations at around 10 times. Well, it's not expensive because they're comparing to the Nifty valuation, which is at around 20 times. And they're saying the differential between Coal India's valuations as well as the Nifty valuation is much higher than what we saw close to around 10-15 years or so ago. So put all this together, Jefferies is bullish on the stock and the stock is flying away in today's trading session.
Okay, interesting. That's Coal India. Dr. Lal PathLab numbers are also up for you on your screen. The EBITDA, absolute EBITDA, has gone up by 16%. There is a 120 basis points improvement in the company's margins, 28.2% versus 27% on a year-on-year basis. And profits too have exceeded the CNBC-TV18 poll by 10%. So a 10% beat on the bottom line. The stock is inching up. Revenues at 602 crore have come in line with street expectations. By the way, Europe has also picked up. When we started the show at about 215, 230, European markets were up 0.8 to 1%. But now you've got a 1.5% gain on the CAC. The DAX too is up 1.3%. So positive momentum is building up in the European indices. And that's pushed the Nifty above 24,300. Let's get you some opinion then. Global opinion coming in from Chris Wood of Jefferies. On India, he's tactically cautious now. But given the surging retail flows and the extraordinary resilience, he still likes India over the longer term.
India has shown remarkable resilience in the last week, or in fact, it's shown remarkable resilience in recent weeks and months. As for the Indian stock market, is being driven first and foremost by domestic flows. So what's interesting about India is foreigners are barely over. We don't believe foreigners are even overweight India anymore because of the big rise in the India's neutral weighting. We've had huge flows on the part of domestic mutual funds and retail investors into the Indian stock market. So the resilience on the capital gains tax is more surprising to me than on the election. And then we had the resilience demonstrated over this BOJ-triggered correction we've seen in recent days. However, I have to say that tactically I'm a bit cautious on India, but it has been extraordinarily resilient. So if I was investing, if I had a mandate to invest $100 in India right now today, actually I would only put in 1/3 of the amount because the overwhelming likelihood is we need to see a bit more of a correction. But fundamentally, India remains by far the best equity story in this region and globally on a 10-year view. And the fact that it's been driven by domestic money and not dependent on foreigners is extremely positive. It also means that any major correction in India, the foreigners will buy because they're underinvested in the market.
Welcome back. Just take a look at the broader markets. There are stocks that are just flying off the shelf as we speak. Geo Financial Services, the stock saw a sharp correction from around the 370 mark, went down to around 315. That stock has now moved to the high point of the day. So big spike out there. SBI Card as well is up close to 3%. You'll see what's so big about that. Most of that move has come actually in the last 10 minutes or so, and the intraday chart will tell you the picture. And Lotus Labs as well. That as well is pulling back. Remember, it saw a sharp correction of close to around 10% from the recent peak. But now that one as well is moving up. Well, I think a good time to get you some market opinion. Earlier today, we spoke to Neeraj Seth, CIO and head of APAC Fundamental Fixed Income at BlackRock. He spoke on the yen trade as well as his outlook for the Indian markets. Let's listen in.
First of all, I don't think we have seen a complete unwind of the carry trade. Now, based on the data that I've seen as well as the estimates from different market participants, we probably are done maybe 50 to 60% of that unwind. Now, what happens path forward? given the market volatility and the shift we saw over the course of last 1 week, I don't think you will see a lot of addition to the carry trade immediately. But as the currency settles down and BOJ shows a lot more patience with regards to the normalization or hiking path, you will see some buildup of the carry trade, maybe not to the same extent. On Indian markets, medium to long term, I'm still positive. Corrections are good. I don't think that should be something that should stop people from looking at long-term investing. So the macro story is intact. I don't see anything changing there. From an RBI perspective, the Fed easing opens the window for RBI, but looking at the domestic monetary conditions as well as the inflation alongside the growth dynamics in India, I don't see the rush for RBI to cut rates.
All right, that was a view coming in from BlackRock earlier in the day. We have Mayuresh Joshi, Head of Equity Research at William O'Neill, now joining in. Mayuresh, good to have you on. And, you know, it's been a fairly good, resilient day for the market. We are looking at gains of over 300 points in the Nifty. Let's talk about some of the movers and shakers. So in terms of the earnings outperformers, we've had quite a few names, PI Industries, Cummins. Anything else in the last 24 hours? These are stocks we've discussed, but anything else that stood out for you that makes the cut?
Afternoon, Surbhi. I think PI's numbers were pretty decent. So if you look at the margin expansion which has happened, clearly operating efficiencies are now getting played out on the balance sheet. The new products, and specifically, I think the bio-based products, are seeing a lot of traction. And therefore, the management sounds very, very hopeful in terms of a very reasonable volume growth going forward. In fact, they have launched a protein-based platform, and that should also gain a lot of momentum in the next few quarters as well. So PI is one stock that probably stood out. Yes, Cummins specifically related to its India business. Looking at their parent commentary was a little bit circumspect. But I think good set of numbers that Cummins also has posted. I think this entire pack, Cummins, Siemens, ABB, will keep on posting good set of numbers. And there will be a classical dilemma, Surbi, whether you chase these stocks with good numbers and execution that they are doing, or look for valuations on the other side, which are very, very expensive for these companies.
Mayuresh, what about IndusInd Bank? Sixth day of losses now for IndusInd Bank. The stock is off 20% from its 52-week highs. The numbers are out. We know what's happened, but continuous selling coming through in IndusInd Bank.
Afternoon, Ivano. There is some supply side pressure that is definitely there on IndusInd. But to a large extent, within BFSI, we still remain very, very optimistic on the larger names like an ICICI Bank, where our belief is that the deposit mobilization, which is a big headache for the industry as a whole, should start normalizing at some point of time in the next couple of quarters. The other parameters, including expectations of strong retail advances growth, should continue. The provisioning that they have on their balance sheet is extremely strong as well. And therefore, out of the larger names, ICICI Bank is something that we remain optimistic about. Within the Midcap names, Karur Vysya Bank is something that we remain very, very positive on in markets with India as well. The numbers have been very, very good. The management sounds very, very optimistic moving forward as well. So if you benchmark most parameters that BFS as a space has to look forward to, in terms of cost to income, in terms of provisioning, in terms of asset quality, Karur Vysya's core dynamics might show further improvement in the next couple of months.
No, got that. Let's pull up Gokuldas Exports. I mean, I think the stock is down about 5% or so after yesterday's very sharp rally. I'm not sure if this is profit booking because there are numbers from Gokuldas expected later in the day. Or the market is sniffing something here, but it's a 50 rupee cut on Gokuldas Exports coming through. Did you Mayuresh, look at Fusion Microfinance? Limit down 20%, asset quality issues and whatnot. And if you have, is this just a Fusion issue, or is there a broader read through for other MFIs?
After Prashant, I think absolutely bad set of numbers. And therefore, I think if you probably look at the microfinance universe, I think you can't just draw a simple, you can't have a same paintbrush for the entire sector as a whole. A few of the companies are doing well within this space as well. The collection efficiencies, in fact, have remained extremely stable. With monsoons expected to be normal this time around, the expectations in terms of a very strong rural comeback might also augur well for microfinance lenders as well. At the same time, if there is a scenario where there is a rate cut, before the end of this calendar year. That also aids their entire borrowing mix as well. So bad set of numbers for Fusion, but would not paint the entire sector in the same way.
Okay. Well, we are down to the last, I think, minute of trade. By the way, Zomato has had another good session. Didn't discuss that stock, but again, good price and volume action on Zomato, 7% up after the blowout performance post the numbers at Zomato. Well, good session for the market as a whole. Lots of repair work, 300 points up on the Nifty, and a close in all probability above 24,300. That's what the day is made out of. If we talk about movers and shakers, PSUs have been a very, very strong side of the market once again, especially the larger ones. ONGC and Coal India are leading from the front, gains of about 6 to 7.5% on these stocks. Then the Adani twins, the big ones on the Nifty, Adani Enterprises and Ports, they've had a good session as well, 3.5% on the higher side. Speaking of PSUs, throw in a power grid there in the